you're obviously on the phone, and obviously we know each other from a networking group. And you had said something. Do you want to get into the deal in Michigan? Because you had said something about that, and I said that's a great idea. If you want to transition over to that and kind of, I'm assuming it's the one in Michigan. And again, if it's not,
Yep.
let me know. And let's walk through that. So you talk to the broker, kind of walk through how we got that, and maybe if you wanted to share the underwriting, I think people would enjoy that and get something out of that if you want to do that.
Yeah. We could do both. One is I can talk about the Michigan property, but then also, I guess my approach to finding deals,
Sure.
kind of the first
Sure.
cut at them and this type of thing. And the reason I say that is, for this Michigan property, that one came from a partnership. I didn't find the property. I didn't find the broker, but I knew the partners. And I knew them, long before the property came up. And so through that, friendship over time, I would say, that's where this opportunity came from. So the Michigan property that we found, like I said, I wasn't on the general partnership at the time when they found it, but it was one of those where it was part of a portfolio. My partner put in an offer on it, even on a different property, and that was part of that same portfolio. It didn't go through, the offer was rejected. They wanted to go with someone else. And through following up and persistence, right, that property, as often they do, came out of contract, right? They couldn't close on it. And so the broker came back and said, hey, are you interested in these properties? And he said, of course, yeah, at the same price we offered. So it ended up coming back to them. They got it under LOI, got it under contract. And then, in the course of due diligence is where I came, I would say, officially into the team, having known about it, but not really participating in it actively. So I came into the partnership roughly in the middle of due diligence, and, helped with some of that, helped with some of the capital raising and this type of thing. But that property, again, it was, and I do the same thing with the brokers I'm in contact with. It would have never happened if there wasn't any follow-up. So just because you throw an LOI out there and it gets rejected doesn't mean that the guy that's on it's going to close on it. Especially these days, and how offers are coming in. I think you'd be surprised how many kind of come back.
Mm-hmm.
I heard someone that is very well known, at least in my circles. And, he said, he's never, in all the deals he's won recently, he's never been the highest offer, but he's always been the one people know that can close.
Yeah.
And I think about half, I can't remember the number. I'm going to guess and say half of them were under someone else, and they fell out and they came to him because they knew they could close and they needed someone that could close on it. And I think that's how, this one came about as well, is, trust goes a long way, even if you haven't closed on a property, and that's through the relationship. And so the broker was willing to, to take a risk, because for them it is a risk. It's their money in their pocket that's going to feed their family eventually, and that's a risk to take on somebody that doesn't already have a property or hasn't closed.
Now,
so they took the risk.
How many units was this property?
So this one was a 41 unit property. It's Class C. And it needed some value add. So this one was not the turn every unit type of value add, like, a lot of people, go after. This one really, it needed a new roof, and the units for a Class C property were good enough,
Okay.
And that's kind of how we approached it. Was the units are good enough. So let's not go dump, $5,000, $7,000 a unit into this property.
Yeah, but the roof was a big enough expense already. I mean, even if you had to do the units, a roof is probably a lot more expensive than doing all the units, I mean, that's
Yeah, so yeah, it's a TPO roof, so it's not shingled, so it's expensive. I think the
okay.
roof alone's about $100,000 on this property,
Wow. Okay.
just for one of the buildings. It's two buildings, but one of the roofs is $100,000 bucks. And then we had some other repairs, just a few of the units and a few miscellaneous things for another 100,000. But overall for a 40 unit property, $200,000 capex, it's not too bad. And the way that rents are going right now in that area, we expect to exceed our underwriting. Rents
That's
are doing
great.
quite well. There's a lot of competition for properties, or for, I would say, tenants and units, and, people are out there looking for places to live. And, there's 4 units that are down right now because of the past roof issues. The roof's now repaired. And, we're working to bring those units online. So it's been a good property. I think it's a good team. We're still learning, but at the same time, it's there's a lot of confidence. Looking at a multifamily isn't overly complicated, right?
Yeah.
If you've owned a house, if you've owned other things, to figure out, where can you add value, where can you find money, where can you create other income, whether it's through laundry or something else, or improvements. So it's been a great property. In general, we were pretty conservative in our underwriting, because it was still in that early COVID phase, right?
Okay. I'm just going to ask you what it was. Okay.
Yeah, so we closed on it in March. We had a couple of postponements to closing, but in general, we closed on it in March. So a lot of the deal came together at the end of 2020, right? And there was a lot of uncertainty back then. And you know, when I came in, I asked, of course, a lot of questions. I tend to, again, have a pretty analytical mindset to things, especially in the underwriting. We did end up changing some things, and which honestly made the deal look worse on paper. But because of where we were, it made sense to do that, to take a little more conservatism up front so that we could, ensure we're going to deliver on the back end of the deal. So I'm glad we did that. I think, where we're at today, everything looks pretty good. You don't know where you're going to be 2 years from now, but at least from
Today
today's
you're
outlook.
okay. So now when you initially, so you said initially when they did the underwriting or the walk into property, the units were good enough. So that obviously that was a determination by the group that, okay, we don't have to stick in what we normally do, 5 or 10 grand a unit. And so you decided to do, yes, the roof, which is a big part, but was it also exterior stuff to the building more so than interior, right?
So there's some exterior, but most of it was interior, right? If you like, I can show you the
Oh, go
property.
ahead. Share your screen. Do I need to?
Probably easier to have some eye candy on the screen than to not. So
Can you share?
I'm clicking the button, it won't let me.
All right. Try it now.
Okay, there we go. So let me know if it's too small for you guys, and I'll adjust.
No, that looks good.
Okay, so this is actually, I use this now as a sample deal package, but it's 98% property.
Okay.
Yeah. So this is where we bought it in Kalamazoo. It's just outside of Kalamazoo. If you see the map in the bottom left,
Mhm.
it's actually up in Parchment, which Parchment is, up just kind of a suburb of Kalamazoo. It's like less than 10 minutes away from downtown, to give you an idea. But it's also kind of a nice area itself. It's not quite as busy, and so a lot of people like it. I'm going to burn through a lot of this. That was all the good reasons we like the market that I burned through. But the other, I mentioned we were a bit conservative. We did look at the market. We looked at where the rents were. overall for the state of Michigan, and of course Kalamazoo and Portage, those are neighbors. And so we looked at the local area, 6%, 5% year over year change. Yeah, it's pretty strong basis. I don't know what they are this year, but I know that they're still growing. And then specific to Kalamazoo, just looking at the overall trend, it was pretty steady. To give you a feel for what we underwrote for the year over year change, we put in like 2%. Now we did bump it in the first couple of years because we're fixing the roof and adding that value, and we'll be attracting a different tenant base, and because of that we'll be able to raise rents. But in general, the years beyond that, we were pretty conservative. And I already mentioned it was Class C. It's actually 2 buildings. Both of them are 2-story. It's got, one roof is shingled, one's the flat roof. But overall, most of it is 1 bedroom, 1 bath. And here's the property itself. Is kind of where I wanted to get to. The general layout of, the units, if you will. This is up in here. Let me squish my screen a little bit. It might help them show up a little bit. Sorry, this is on a website that we sent to our investors. So this was our.
Good. It's a nice brick building.
Yeah. So by the way, this was basically our investor packet that we sent people. We use something called Adobe Spark. For those that are active out there and looking for creative ways to send out investor packets that's not a PowerPoint slide deck, I encourage you to look at Adobe Spark.
And it's free
and it's easy. Yeah. So
this
is the building, or this is one of the buildings. The other one's just to the left. I don't have a picture of it in here, but yeah, I mean, it's an older building, right? It's got a flat roof. It needed some work. A lot of the fascia over here is looking pretty rough. It needs some new paint, needs some shingles and touch-ups on the outside. But overall, it was a decent property. And the interiors, it's not a Class B property on the inside, but it's also not falling apart. And for that area, when we talked to the property manager and just kind of did a general assessment on, where's the biggest value for this to get the biggest bang for our buck. That's where we landed on doing a few touch-ups here and there rather than coming in and doing a full remodel, So
now CapEx, for those that don't know, is what?
Yeah, so it's just the capital expenses that you're going to put into the property to upgrade it. Yeah, a lot of people shorten it, capital expense to CapEx, operating expense to OpEx. So, yeah. But yeah, it's just the money that you're going to raise in the beginning that you're setting aside to improve the property with. And so for us, there's an offline unit. We're going to rebuild. It's down to the studs. We'll bring that one online. There's some minor repairs I mentioned, but most of this was in the exterior, improvements. So, our underwriting, I mentioned we were pretty conservative on it. We didn't get to market rents until year 3, in the underwriting, and we did that simply because we were still uncertain about COVID, we were also fairly certain that we could get it, by year 2,
Okay.
and we just didn't want to go in with what was presented as a slam dunk to investors and run the risk of missing something else on the front end, just because you never know what's really in a property until you're running it. So we didn't want to cut it so close in our underwriting that we didn't have some conservatism in there. So we also changed and beefed up some of the numbers, like real estate taxes. We're not going to hit these numbers for real estate taxes on the property, but we bumped them up simply because, again, we want to be conservative, under promise and over deliver, if you will.
Gotcha.
On the returns, I'm not going to go into a lot of details on the returns, but in general, it was just under 2 million. It was 1.8 million that we got the property for. And yeah, as far as the returns are concerned, the average annual return for our investors was around 16%. Internal rate of return was around 13%. And
now, if you could scroll back up, and the investor returns there, the
Yeah.
member equity and stuff like that. So you did a 75% to your investors, your LPs, and then the managers or the GPs got 25%, right? Is that how I'm
Right.
reading it? Okay.
That's right. Yeah. So we chose to not, I mean, there's a lot of ways to structure it, right? So
Mm-hmm.
you can, we did a straight equity split for this property. A lot of people will do preferred returns, or they'll do some type of waterfall or hurdle over time. We did not. We just chose to do a straight equity split where, yeah, 75% goes to the investors and 25 goes to the managers. There is some fees in here, like the acquisition fee. You should get paid for putting a deal like this together.
Yeah, and I think and that's good
and
to mention that, Brady, is because a lot of people say, oh, what are their fees? Ask them what the
mhm,
fee. Folks, you really, you don't make it on the cash flow. You have to make it on the fees because I want the LP or the GPs to be compensated to watch over my investment, right? I
mhm.
mean, that's really what it is, and that's how we get paid, or the GPs get paid on these deals. And doing it again, one person is not getting that acquisition fee, right? It's usually several members of the GP. So it's not,
Mhm.
Brady's not making a check for 55 grand. So just, be cognizant of that. Thank you for sharing.
Yeah. Yeah. And I'm also a passive investor in another deal. And at the end of the day, it's a lot of work to put this together.
Mhm.
It's, it's a compounding of relationships, if you will, over time, both with the brokers, with the lenders, insurance, getting the deal across the closing table takes a tremendous amount of work. And yeah, I think the general partnerships that put these deals together, they need to be compensated well. Of course, not in an overabundance, but at the same time,
Well, yeah, it's got to make it
a,
worth
a
their
fair
while.
a
Now,
fair fee.
in
Yeah.
your group, is there a certain part of the GPs that are doing the asset management? Are you involved in that? I guess, how did you guys break that up?
So we broke it out. So there's one person responsible for it. Yeah.
Okay.
But we all, I would say, participate in it. Yeah. Responsible to the extent that, it falls to them to keep track of the property, to follow up with the property manager, to make sure the business plan's getting executed, in these types of things. The general partnership's always going to participate, though, in you know in the management of the overall property, right? You should have a voice at the table for what's going on, but there is one person that's responsible to keep track of even the finances, to make sure that we're putting everything together in a reasonable way so that we can look at it and make sense of it and say, okay, are we going to hit our targets,
Mhm.
to track, kind of these key performance indicators, if you will, about the property. Where are we on vacancies? Hey, we've got 10 units coming up over the next 2 months that are going to need to be filled, working with the property manager to understand, hey, where are you guys at in your process? Someone's got to do that, and that's a lot of work. Obviously, not all the GPs are going to do that. There's going to be one person.
Okay.
But on the other side of it, looking at opportunities, because the business plan's great until you close, and then and
Yeah,
then you
then
figure out,
reality hits, right?
yeah. And so that's why I say, yeah, we all participate in it. There's one person responsible, but everyone participates to an extent. Um, and that extent so far, we're still very early, but so far it's been looking for more opportunities to increase our net operating income, right? Or
Mhm.
the income overall of the property. And to really think through, now that we're seeing the property, seeing how it's operating, where are those nuggets that we, may have overlooked doing due diligence, but now that you're running the property, you get to see, deep in the weeds. So that's where you know, a lot of the different experience in the room with the general partners can help. Yeah. Rather
That's
than just
good.
one person looking at it.
That's good. Interesting. Listen, let me do this. If you don't mind, let's see if we have some questions, because I'm sure you opened up a whole bunch of questions for people. If you don't mind, does anybody have any questions that they'd like to ask Brady about this deal or a deal in particular? Because I definitely want to have time for that. you do, go ahead and just unmute your mic and then speak the question.
This is Chris.
I got you, Chris.
Okay, good. You can hear me. I noticed 7 years on the hold. Is what type of feedback have you been getting from, I guess that investor pool was okay with it, but others also?
Yeah. So I know a lot of people are writing to like 5 years right now. And that's typically the baseline that I'll underwrite a deal to kind of going in. For this property, we chose 7. It actually came from some of the larger investors that were going to come in, and our impression of what they really wanted. They wanted a little bit longer hold.
Okay.
We didn't want to do 10 years, so we kind of split the difference.
Okay. Awesome.
Okay.
Yeah, yeah.
And
Sometimes
but
you
at the
hear
same
people.
time, yeah, go ahead.
No, go ahead. No, go ahead.
Yeah, I was going to say at the same time, it's not really where everyone wants to be. If you're trying to get your money to work the hardest it possibly can, the best time to sell is after you've done all the improvements and you've stabilized, right? That's your peak IRR, right? Your money's already done. It's
Yep.
put in all of its work and it's starting to reap its rewards. And you can now show a history of higher rents. That's the time to jump if you're chasing internal rate of return. But at the same time, you got to take some other things into account. On this particular property, the loan that we have does have a prepayment penalty to it. It steps down as it goes, but at the same time, we would, Paul, I think you're unmuted there.
Like come down and just talk to Granddad and spend
Hey,
some time.
Ryan, if you could mute, that'd be great, dude.
But so there's things like that we had to take into account. But we also in the investor webinar gave them a hint that, hey, we don't really, we're going to look at the best time to sell, and you can never pace a market, but at the same time, if you're in a great market, you don't necessarily just want to wait inevitably, another 2 years to sell something. If you're in a great market, you're going to get great returns. We let our investors know in the webinar that, hey, this is a 7-year target, but we're going to reevaluate it, at year 4 and 5 and see when the best time to get the best returns for our investors.
Okay, awesome. No, it's just good to hear that. Yeah, well, I know your investor pool could be anywhere, but yeah, it's good to hear that they were at least open to something beyond 3 years or even 5.
Yeah. Yeah. I mean, I know some people, they're underwriting properties at 10 years, and they're just setting the expectation that it's going to be a long-term hold and they're going to refinance and then sit on it for 10 years.
That's why it's good too when you get involved in these and have these webinars with the GPs. Make sure that is a question that you get answered, right? Don't think that they're gonna flip it in 2 years. Make sure you understand that when you're going into this, that your money's not going to be 5 years, it's going to be 7 years. And I've seen the same thing as some, they're going a little longer because of COVID, because we don't know what's going on, right? That's good.
Mm-hmm.
Thank you. Awesome. Anybody else got a question?
I was just curious
Brady.
about the,
Go ahead, Hoffpauir.
oh, okay, thank you. About how you were establishing the broker relationships. Was it you would see a listing somewhere and reach the broker, or were you just kind of, hey, let me see what this broker has to offer and introduce yourself that way? How were you establishing these broker relationships?
Yeah, in the beginning, I was doing it poorly, I think is the word. But over time, I kind of, especially in the early, when I was getting started and I started to get a little bit of momentum, I kind of established a momentum in getting a referral from a referral. And that's how I started to build the better broker relations. Because then it wasn't my reputation when I'm calling somebody. It's like, hey, Joe, whoever, referred me to you, said you were great in the market. This is some stuff I'm looking for. Does that sound like, is that an area that you specialize in or can help me out in? And just simply having a name that referred you was a big win. And then I'd also do the same thing with the broker. I'd ask the broker, I said, hey, look, I'm always looking to build my list. can you recommend a good property manager? Because, I have someone that I'm working with, but, I'm always interested in exploring, more people. And then I would call the property manager and I'd say, hey, so-and-so referred me.
That's good. It works. Hey,
And it's just a snowball. Yeah. You start ending up just snowballing on your contact list, and you don't always get referrals, but it never hurts to ask. And then as you start to, your property manager is I had one property manager that gave me like 7 broker referrals. And I think out of that list, there's probably 4 that I'm in contact with now, maybe 3 from that one referral. So yeah, I would highly encourage referrals. I've also paid a VA. I created a template at one point towards the end of last year, just a Google Sheets. And I recorded a video for LoopNet, and I said, hey, Mr. or Mrs. VA, and I just recorded myself and showed them what I wanted them to go do and how to fill out a spreadsheet. And they went and filled out, they added like 50 names to an Excel spreadsheet for all the brokers that were in LoopNet. It took me a 10-minute video and probably 10 minutes to create an Excel spreadsheet. So I've done that too. I had a lot less success with that, to be honest. But it's another way. I also drove around. There's some areas just south of where I'm at that I was interested in. I got in the car one day and drove around with my phone and took pictures of commercial real estate signs, and started calling those brokers. And that's the harder way to do it. But if you're looking for deals,
yeah, that's good though. That's good. That's a good idea. I never thought. I don't hear everybody say that they actually got in the car and actually took pictures of sign. That's old school.
That's right. That's right. Yeah. But I mean, if you're looking to build a list, I mean, some of these guys that are out there selling commercial properties, they may specialize in the industrial or the retail or whatever. But some of them do come across, or they may have someone else in the office that does multifamily. And it takes more work, but sometimes they don't know what they have, especially some of the smaller firms. They may be selling a retail property, don't get into multifamily, but a month from now, maybe they do. And I've heard people get opportunities that way. I haven't found one that way yet, but there's always hope.
There you go.
Yeah. Hope that helps.
Anybody else?
Thanks.
I think you had a question, didn't you, Daryl?
Yeah, I did, but that's okay. I changed my mind.
Maybe also on the broker side, I also found it helpful. It's tough for me and my personality to do cold calls. I can present in front of people all day long like this without issue, but to do a cold call, there's some switch in my brain that's tough. It's tough to get over that hurdle. I'm not a salesman. I can talk to anybody, face to face. But that cold call to someone that you're trying to build that, that relationship with over time, that first step's always the toughest. And, for me, what I started doing was I would use the team. I wouldn't call them a team because we're not under one umbrella, but I would say, yeah, me and my partners, because at that point I would legitimately, I had people that I was talking to, and we were telling each other, yeah, let's go find a deal. I wouldn't say me and my partners if you legitimately are not working with anybody. But if there's one person that you're working with that's either going to bring capital to the table, or they're going to do the asset management or whatever, they're underwriting deals with you, even if you don't have a deal, they're in my book, they're partners.
Yeah,
because you're working together.
That's true.
And so I use that a lot on broker calls. I say, yeah, me and my partners were looking in this area and so on. And in the beginning, I always got the question, well, where are they? What's your responsibility? Brokers are prickly sometimes when you first get to know them. But it did help to have the knowledge that it wasn't just some person, a singular entity roaming about the internet finding properties. It makes a big difference to know that you already have people in your corner, and certain people are responsible to raise the capital. You're responsible to do whatever you're doing, and so on.
It gives you a lot. I find it gives you a lot more confidence, right? Because so when you get asked, well, who does the asset management? they can't really ask you those questions. You don't, if you say, hey, I'm the money raiser, well, you know what, you've got an instant, out. Well, I don't do that part of the business. I'd love to help you, Mr. Broker, but I don't handle that part of it. Right. And then, that's what I've kind of found, that you can just stay focused on one, and say, hey, that's my other partner.
Yeah.